Hi, welcome back to Brainmore Business Hub channel. My name is On.Mollen, the Managing Director of Brainmore Chartered Accountants. If you are a small business owner in South Africa, or a business owner or a director or a manager, I want you to pause and listen carefully, because how you handle your company taxes has significantly changed. Over the last few months, many business owners and even accountants have been frustrated with one thing: filing the income tax return on SARS eFiling. It now takes double or even triple the time it used to take. But this isn't just a system error, there are reasons. And today I'll explain 4 things. Number 1, what's changed on the tax return, and number 2, why SARS is doing it, number 3, where all this thing is going, number 4, and what you need to actually do to stay ahead and avoid the risks. Okay, let's start with what's changed on the tax return. So what has actually changed? There are many updates SARS is introducing on the income tax return since 2023 into 2024, 2025. So number 1, there's detailed expense classification required now. No more lumping expenses into broad categories. You now need to itemize and justify all your general ledger items, especially other expense, because I know sometimes there are those fun expenses that people just used to put in other expenses. Be careful. You need to clarify what it is. So example of classification to those that doesn't understand, number 1 is, you can say cleaning service is 40,000. You are classifying. Marketing expense is 120. Staff welfare is 15,000. So those are the classes of your expense. So that's the detailed classification that you need to do on your financials. Number 2 is expanded and mandatory schedules. SARS now demands full schedules for example, capital gains tax, assessed losses, dividends that you paid or dividends that you received, interest income that you earned, or your foreign income as well, or even loans too, all from shareholders, which is kind of a risky one now. Even if the amounts are 0, what is important is you must even fill them in with that 0. So loans to and from shareholders is a significant item that you need to disclose as well. Number 3 is the beneficial ownership and the structure questions. So concerning beneficial ownership, you must now declare and answer the following questions. Are there other entities in the group of companies that is associated with your company? Is your company linked to a trust? Or are they connected parties or foreign owners within your company? Failing to disclose this accurately, underline the word accurately, could actually raise flags for probably transfer pricing or even anti-avoidance investigation. It will prompt to be a red flag. So in answering these questions, you need to be truthful. And number 4 is audit risk indicators. So the new income tax return includes, the ITR 14 includes questions such as, are your financials statements audited? Are they reviewed or are they compiled externally? What accounting policies do you follow as a business? And what systems are you using for your records? So this helps us to profile your business and pick targets for deeper review. So a question you need to be able to answer is, are you ready to answer all those questions? So one might ask why SARS is doing all this, even to small business. SARS is becoming more data-driven, automated, and AI assisted. They are using data analytics to compare your business with maybe industry norms with other companies within the same industry. They are also using third-party data from banks, CIPC, VAT, and payroll, and other suppliers. They're actually doing what we call smart risk profiling for audits and flagging non-compliance. So the data, numbers don't lie. So the data, if put together, will be able to profile your company for audits purposes. This means that every field you leave blank is now a trigger. Why are you leaving it blank? So every mismatch becomes also a red flag. And every answer that you could not answer could lead to an audit. Can you imagine that? SARS is moving more from manual audit model to a prevention and profiling model. They want to profile you and identify the risk. Okay, how does this impact you, especially small businesses in South Africa? Here's the real impact. Filing your return now takes longer, which means 3 or 5 times longer than before. And accounting fees may increase or are going to increase, because now accountants are saying we are taking more time. Poor records can get your return rejected or even audited, and manual systems put your business at risk. So you need to make sure that you are moving with times, systematize your company. Even smaller business must now operate like medium-sized ones when it comes to their compliance. So someone might sit now and say, what should we do now? Our advice from Brynmore as Chartered Accountants: do your bookkeeping monthly. Number 1. Keep your expense and income schedules organized, which is number 2. Document your business structure clearly, which is number 3 advice. Submit early to avoid last-minute errors, which is number 4. Number 5 is work with professionals who understand the new landscape and where things are going. So in closing, SARS isn't just collecting text anymore. They are collecting what I call insights, data insights. So to stay ahead, stay compliant, number 1, keep records clean, and also understand what SARS is asking you for. So let Brynmore, your accountability partner, help you in making sure your company stay compliant. Why don't you like, subscribe, and even share this content to someone whom you know is going to benefit from this content. Thank you for watching.